This is CFO Talks, and I'm Kieran Ryan. Today we're joined by Tanya Tosen of Tax Consulting. Tanya has over 15 years of tax and employee benefit experience, which encompasses optimizing employee salary packages, incorporating all benefits, both from a tax and cost perspective. Her years of experience also extend across complex payrolls, providing specialist technical knowledge around employee and expatriate taxes. She's one of the few consultants who has worked both as an in-house tax analyst as well as a specialist consultant and thus understands both perspectives. Previously, she was with Johnson & Johnson Medical and Hatch-Goba, where she worked in both payroll and finance departments, managing local employees and over 150 expatriates in 15 countries, including Africa, Europe, and the Middle East. She was also a tax manager at Deloitte. Now she's part of Tax Consulting, which is a firm specializing in employee remuneration structuring, employees' tax audits, and employees' tax training. With her largest client having over 1,200 expatriates, Tanya also assists many multinationals with both complex remuneration and tax solutions. She's also considered as one of the leaders in the area of tax and benefit compliance and process optimization. Welcome, Tanya. Given your background with multinational companies, you would have a pretty good sense of how South Africa stacks up against other countries in terms of the complexity of its tax code. Is our code more complex than other countries?
Good morning, Kieran. Thank you for having me on the show. Yes, most definitely. I would definitely say that South Africa stacks up as one of the most complex tax systems in the world.
Really?
Yes, most definitely.
Why so?
A lot of the countries, I remember when I did my postgraduate degree, our tax lecturer actually told us a lot of countries, their tax law only has about 100 pages. And ours, we got these massive manuals and I was so overwhelmed. And she actually told us that it's usually because South Africans always try to find a loophole somehow. You know, we are very creative in not abiding by laws. So they have, tried to generate as much revenue as possible by closing in certain loops. And we've seen this over the years. If we just take travel allowances, for example, and reimbursement travel, how that has changed over the years and how SARS is trying to generate additional income, as well as with the retirement reform which came into effect on the 1st of March 2016. They have made it seemingly easier and encouraging for individuals to contribute more towards their retirement fund. But the complexity around those calculations, we continuously see that companies still get it wrong.
Right. I remember reading an article some time ago about the United States tax code. It's apparently 29,000 pages long. I don't think we're there yet, are we?
No, definitely not there yet. However, there are specialist areas within our tax system where I would encourage individuals or corporates to consult with, because you can get yourself into a sticky spot with SARS if you actually don't know what you're doing.
Right. Just for people who are not South African, SARS stands for?
The South African Revenue Services.
Oh, right. That our favorite organization. Okay.
Yes.
All right. Okay. So we do have a complex tax code.
Correct.
And it's because SARS, our South African Revenue Service, is trying to close loopholes. So we're pretty good at finding loopholes.
Yes, I think you can even see that on, if you just take our highways, for example, our laws are generally just a guideline for South Africans. So we try to find areas where we can optimize a situation.
Right. Okay. Yeah, you're talking about our e-tolls, and,
Yes.
and where I think it's only 20% of people are paying for the e-tolls and the rest are getting a free ride, and the system is broken and it will never work. So this is kind of indicative of our sort of national character in South Africa.
Correct. And generally, South Africans are not totally law-abiding, unfortunately, and SARS has picked up on this. And they are now taking stringent measures to generate. SARS is not making budget year on year, and they're taking stringent measures to actually capture those non-compliant individuals and hold them accountable. For argument's sake, it's now a criminal offence if you do not submit your tax returns. Last year, the Common Reporting Standards was also entered into with South Africa. And what that means in layman's terms is the South African Revenue Services now has access to all bank accounts worldwide. So for those individuals who have not disclosed their income from a global perspective, which is required if you are a South African tax resident, SARS now has access to a whole bunch of information.
So if you have a Swiss bank account, you've been hiding your money away in Switzerland, they can get access to that as well?
Yes,
To your
100%.
bank account?
That's correct.
Goodness gracious. What about the Cayman Islands? Is there no place safe from SARS at the moment?
No.
No place at all?
No, not to my understanding. They are upping their technology and their IT skills. And because the world has become a global village, with technology, this is easily accessible, and SARS has entered into arrangements with the respective countries accordingly.
Wow. How do you become a tax consultant, and what drew you to this area?
Well, especially in South Africa being such a complex tax system, I always thought it would be beneficial from a personal perspective to educate myself and to understand, how you can optimize your current structure, whether it's from your personal salary side as well as when you file your tax return. So I know it was a challenging system and I enjoy challenges, but I thought it would be great to actually educate myself and understand, the reasoning and why how our tax system works.
Okay, Tanya, if you were designing the tax code from scratch, are there any areas you would redesign completely? How would you start? If you had a blank piece of paper, what kind of tax system would you come up with? Be honest.
I will be honest. I often get the question is, how can we pay no tax?
Right.
And that's what every South African would love. And, especially in the Middle East, there are zero tax systems in place. And everybody has the perception that that would be like utopia. Why can't we follow that route? Unfortunately, what employees and corporations sometimes don't understand is that the cost of living over there is so much higher. So they capture the taxes in a different mechanism. So there might be no tax against your salary, however, your cost of living is exorbitant in comparison. So they make up for it in other areas.
Right. So in an ideal world, we'd have zero tax. That blank piece of paper would stay blank in your ideal world.
I think our system in South Africa is a little bit fundamentally flawed in the sense that we generate most of our taxes from individuals, which is a very big concern when our economy is taking so much strain, where retrenchments are on the up and up, and our GDP is not growing significantly enough, and we're not creating enough jobs. So if I could swing where the taxes are generated from, I would like to possibly provide individuals more tax relief, because there's continuous pressure on South Africans, which you can see on an annual basis.
Right. I think that it's individuals, and when we talk about individuals, we're talking about the middle-class South Africans who are paying the bulk of the tax in this
Correct.
country. Is it over 50%?
Yes.
Over 50%?
Yes.
Coming from, 3 million taxpayers?
Correct.
Yeah, that's a frightening figure, isn't it?
It is.
Yeah.
And it's concerning when jobs are lost, and especially after the budget speech this year, there was no inflationary adjustments to the tax brackets. So ultimately, South Africans are poorer based on that.
Okay, now just talk for a minute about your line of work. You consult to companies. Give us an idea of some of the typical issues that companies run into. What are their big tax concerns? Is it for the employees? They're trying to retain their best employees.
Correct.
And they've got to offer them good packages which are tax efficient.
That's 100% correct.
So how do you do that?
So a lot of organizations approach us to try optimize the remuneration structure, both from a tax and cost perspective. They also ask us how can they attract the correct talent into their pool. The way we consult and recommend solutions is the fact that you will find a lot of organizations, if they have a traditional remuneration structure approach, they have a flat contribution to, let's say, the pension fund or the provident fund, and they have fixed contributions for life cover, disability cover, and medical aid. And what happens is when a new employee they're trying to attract into their organization, they have to actually gross that package up quite significantly to either match that net pay that the individual's getting or to better that to attract that individual to their organization. So what we go do and we recommend to organizations is that they provide a level of flexibility into the benefit structure, and that allows the individuals to make personal selections according to their financial requirements.
Right. Now, okay, let's talk about flexible benefits because this is where the cream is. If you're trying to attract and retain the very best talent. Give us an example of what benefits can be flexed, if that's the right word, with a remuneration package.
Yes, that's absolutely right, Kieran. For example, a lot of organizations would offer 3 times life cover as an example.
Oh, yeah.
So we go in and we say to them, we will help you rebroke with your service providers to offer 1 to 10 times life cover, to allow the individuals also to flex their contributions towards the retirement fund. So even though the company might have a flat 5%, we would encourage the employers to look at maybe slightly lowering that and exceeding the 5% to allow individuals to contribute more. And the power behind that is often you will find, because on a rigid structure, a lot of employees go outside of the organization and source additional life cover, for example, and that becomes very expensive. If you allow the flexibility within the structure, in an organization's remuneration structure, you have that bulk purchasing power, and that 100% always is the case, is a lot cheaper for the employees to buy that benefits in-house as opposed to sourcing that from an external service provider.
Right, it's the old retail versus wholesale argument. If you're
Correct.
buying in bulk, you're going to get a better deal. So if they start sourcing their life cover and their retirement benefits within the company, you're definitely going to get a better deal as an employee.
Correct, 100%.
Okay, what about employers that already offer flexible benefits? How can they provide more value to their current packages?
So there's 2 areas I'd like to unpack here. I think employers need to engage with their staff and look at their workforce and their demographics, do a proper analysis, which we also do for organizations. And that helps in decision-making processes on providing benefits that your employees will value. Because a lot of the time, let's say, for example, you have a very young workforce. I know Discovery has a life cover where they also provide an education benefit if you pass away. The children's education is catered for up until university. Now, that would add no value if most of your workforce is single and have no children. So it's about analysing your workforce and seeing how can you motivate them by providing certain benefits. And the sky's the limit here. There's no, as you mentioned earlier on, that bulk purchasing power. You have so much opportunity as an organisation to actually optimise the employee's remuneration structure. For argument's sake, you could even provide insurance for motor vehicles. You could provide a gap cover, a premium that will actually help compensate on medical aid where individuals are overinsured. A lot of people have a fear factor around medical aid, as an example, so they overinsure themselves. So it's also creating awareness and that understanding from the employee's perspective.
Pick up on that point about the medical aid. What if a person has this fear, as a lot of people do? Some people approaching their 50s or their 60s near retirement age, they want to make sure that they've got maximum cover. Just take that area. How would you recommend that they structure that for tax efficiency and also to get the maximum medical aid benefit?
So I think it's important to actually understand your needs and, look at what requirements you need for medical. As you mentioned, people have that fear factor and generally over-insure themselves. But when they look at their day-to-day needs and what do they need to be covered, like a good hospital plan, you will generally find they're choosing a max plan and utilising a very small portion and don't really understand what medical aid stands for.
Right. So in a lot of these areas, people are overspending, right? Their medical
Correct.
aid, they're not using that to the maximum efficiency. They're overpaying for that. Life cover, they're either underinsured or can you ever be overinsured? I'm pretty sure you can.
No. In life cover, you can have as much life cover as you want. Where you can overinsure yourself is disability cover. And a lot of people aren't aware of that. So you can never earn more money than you're currently earning if you become disabled. So a lot of employees take additional cover and overinsure themselves only to find out if they do become disabled, they will actually not get the benefit of those contributions that they've made.
All right, so we're living in tough economic times. You saw the figures that came out yesterday, the contraction in the economy in the first quarter of the year, 3.2%. Are there ways that employers can assist their employees in optimizing their remuneration structure? You constantly hear how people would like to ensure their packages are structured more efficiently from a tax perspective. But can this be done?
Yes, most definitely. I must be honest with you, Kieran. SARS has tightened their net over the last couple of years. If you take something like a travel allowance where only 50% was taxable and now it's up to 80%. But there are still mechanisms that employers can use. And one of the great ones is the employee bursary scheme. If you earn under 600,000 Rand in the preceding tax year, you're allowed to legally structure almost a salary sacrifice for school fees that you pay for your children. That means you pay less tax and that saving is passed on to the employee. And that's a great tax saving mechanism, especially for your lower income employees.
And that's 600,000 per
Yes,
year?
per year.
And what is that called?
Education Tax Saving Initiative.
Okay. Any other ways?
If you look at the retirement reform, SARS specifically put that into place to encourage savings towards your retirement. So you can contribute up to 27.5% of your taxable income towards your retirement and get a corresponding tax deduction. So in that aspect, they're trying to encourage employees not to become dependent on the government when we retire. So that's another way you could optimize your
Yes,
structure.
I mean, we're shocking in this country in terms of retirement savings, aren't we?
Yes, we are.
So 27.5%
Or
of your gross,
it's of your taxable income.
of your taxable income. You can
Yes.
actually get a tax deduction if you put that into retirement savings.
Correct. So there are specific rules. I haven't given the specifics around that. So it's the minimum of 27.5% or 350,000 per annum.
It's substantial.
Yeah, it is substantial.
Do you have any idea how that compares to what it was, let's say, 10 years ago? Has it really improved that much?
Yes, it has. As I mentioned, I am a little bit older, so I can give you that background.
You're not that old.
So if you take pension funds, you were only allowed a 7.5% tax deduction. For retirement annuities, you were allowed 15% towards non-retirement funding as a tax deduction. And for provident funds, there was absolutely no tax deduction. So they have improved on that dramatically.
So it's virtually doubled in the
Correct.
last decade or so.
That's
the
right.
benefits for retirement saving.
That's it.
Okay.
As well as with retrenchments is another tax break with regard to your lump sum payout. In the past, it used to be only 30,000, and now that forms part of your lump sum tax table, which has been maxed up to 500,000 once in your lifetime.
Okay. Last question, Tanya. What about expatriates? Are there ways in optimizing their remuneration structure? Now, here, of course, we're talking about people from overseas who are working in South Africa. Is that right? Or are they South Africans working abroad for South African companies?
So that's a very good question, Kieran, and we provide advice for both. Your inbound are your expats who come from outside of South Africa, who come and work in South Africa, and your outbound expats are South Africans who work outside of South Africa. So if we start with our South Africans who are working outside of South Africa, a big thing which is a hot topic at the moment, that all corporations need to understand is that Section 10102 in the tax law is changing, and that is the requirements where everybody knows it in layman's terms, that an employee who's out of the country for more than 183 days and 60 consecutive days in a 12-month period are exempt from South African taxes on their employment income. That law is being amended from the 1st of March 2020, and that exemption is now capped only up to R1 million. What does this mean for South African expats? It means that there is potentially an additional tax liability that will be owed in South Africa now with that change that is being implemented. So we have noticed a lot of companies now, contacting us for advice because they realize there's either going to be a cost from a company perspective or a massive impact to the employee's net pay. And companies need to start to look at this now rather sooner than later.
Is this got anything to do with the figures that we see recently about South Africans not quite emigrating, but they're certainly beginning to work more abroad? Where the law changes like that, if you remain a South African and you incur this additional tax liability, it might be an incentive to actually emigrate.
Correct. And Treasury is very well aware of this, and they have no problems with that. We have a division within our organisation that financially immigrates South Africans who've decided they have a permanent intention of not returning back to South Africa. And that's one of our busiest divisions because they have severed their tax residency both with the South African Reserve Bank and the South African Revenue Services. And in saying that, they become like the inbound expats in the sense then they're only taxed on South African sourced income.
And this is something new that you've seen, is this busiest division, your
Yes.
expatriate division, purely because of the tax implications of
Correct.
this new change in the law.
Yeah, so there's a massive influx of South Africans who want to financially immigrate. In addition, a lot of individuals haven't been compliant, who have left South Africa and they haven't realized there's a formal process that they need to incur. And that's where we assist those individuals as well to formalize this process.
So they're also giving up their South African passports.
No, you mustn't confuse citizenship with tax residency. That's a whole different process.
Okay.
The other aspect I wanted to just highlight to you is on the inbound expats.
Yes.
So those are expats who come from a country outside of South Africa and come to work in South Africa. As we know, generally expats are very expensive to hire. And what we find in organizations is if they do not optimally structure their benefits correctly, they lose out on massive tax savings around these expats and some tax breaks that are offered to your inbound expats. So it's absolutely crucial and critical that in an organization there's proper planning and understanding around what tax laws and tax breaks you can structure within your expat population.
Great. Tanya, we're going to leave it there. It's fascinating talking to you. I didn't realize that tax was such an interesting subject. It is something that we all kind of push to the side, except when it comes to having to submit your returns. But there's so much development and so much interesting events unfolding around that. Thanks very much again for coming in.
Thank you for having me on the show, Kieran.
That was Tanya Tosen from Tax Consulting.